Welcome, ladies and gentlemen. Today we're going to talk a little bit about different spot ETFs and, of course, the great and terrible XRP price predictions from top analysts. But keep in mind that they will only come true for those who have behaved well this year, huh? Let's go. Hong Kong regulators open the door to Bitcoin and XRP spot ETFs. Game changer ahead? Hong Kong stuck to a professionals-only approach to regulating advanced crypto products like ETFs, but it now says it's open to retail products in what could be a game changer. The city-state is a global financial hub, and once a Bitcoin, Ethereum, or XRP spot ETF is listed in the city, it could open the floodgates for institutional investment into crypto. Crypto spot ETFs are all the rage right now, and the entire industry awaits with bated breath the SEC's decision in January over Bitcoin and Ether applications. However, as the US grabs all the attention on its ETF journey, it might be an Asian financial hub that kickstarts a global crypto spot ETF revolution. Hong Kong has revealed that it's now changing its stance on crypto products and will allow retail investors to get involved in more sophisticated crypto products. The city-state was once strict with crypto and only allowed professional investors to be involved in ETFs, derivatives, and other complex products. In Hong Kong, a professional investor must have a portfolio worth at least 8 million Hong Kong dollars, 1 million US dollars. This left out the majority of the population. However, this is bound to change soon. In a recent statement, the Securities and Futures Commission and the Hong Kong Monetary Authority revealed their stance as the market has developed. A broader range and a larger number of investment products are now available and provide both retail and professional investors with exposure to virtual assets, the two watchdogs acknowledged. It added, in particular, the SFC has allowed SFC-licensed virtual asset trading platforms, VA trading platforms, to serve retail investors and has authorized virtual asset futures exchange-traded funds, VA futures ETFs, for public offering in Hong Kong. Hong Kong to allow crypto ETFs. ETFs in the crypto world have existed for years. However, in most jurisdictions, they are tied to derivative products and not the actual tokens. Essentially, they don't affect the crypto price directly, even if they attract billions of dollars in investment. Spot ETFs are game changers as they invest directly in the underlying tokens and would likely scoop up billions of dollars worth of crypto, decreasing supply and boosting the price. According to one crypto analytics company, these ETFs could propel the market by at least $1 trillion. Hong Kong wants to be at the fore of this revolution and will now accept applications for crypto spot ETFs. In the statement, the two watchdogs said, "The policy is updated in light of the latest market developments, where the SFC has authorized VA futures ETFs and is prepared to accept applications for the authorization of other funds with exposure to virtual assets, including virtual asset spot exchange traded funds, VA spot ETFs." Hong Kong has been pushing to be a crypto hub in the past 2 years, a stark contrast to the anti-Bitcoin stance of mainland China. Despite the JPEX exchange scam imploding in the city and costing investors 1.56 billion HKD, the city remains committed to its vision. Hong Kong's recent decision to open its doors to Bitcoin and XRP spot ETFs could indeed be a game changer in the global cryptocurrency landscape. The shift from a professionals-only approach to allowing retail involvement in sophisticated crypto products marks a major policy change in Hong Kong's regulatory framework. Hong Kong's position as a global financial hub makes this development particularly impactful. The listing of Bitcoin, Ethereum, XRP spot ETFs in the city could indeed open the floodgates for institutional and retail investment into crypto. The move towards crypto spot ETFs is crucial because unlike derivative-based ETFs, spot ETFs invest directly in the underlying tokens. This could have a direct impact on the supply and demand dynamics of these cryptocurrencies, potentially leading to price appreciation. Hong Kong's policy update, especially in the context of the broader Asian financial landscape, is significant. While mainland China has taken a more restrictive stance on cryptocurrencies, Hong Kong is moving in the opposite direction, aiming to establish itself as a crypto-friendly hub. This contrast within the same country highlights the diverse approaches nations are taking towards cryptocurrencies, reminiscent of the varied global responses to other transformative technologies in the past. The potential market impact of this development should not be underestimated. The authorization of virtual asset spot ETFs could propel the market significantly, as suggested by crypto analytics companies. This could bring a new level of legitimacy and mainstream acceptance to cryptocurrencies, much like when major institutions started adopting internet-based technologies. In conclusion, Hong Kong's decision to allow crypto spot ETFs is a progressive step that aligns with the city's ambition to be a leading crypto hub. This move could have far-reaching implications for the crypto market, potentially catalyzing increased institutional and retail investment. It will be interesting to watch how this decision influences the global cryptocurrency landscape, especially in terms of market dynamics and regulatory responses in other jurisdictions. And now, to price predictions. XRP surged to $2,500 possible. As banker explains, 40,000 XRP equals $100 million. Egrag, a prominent crypto market analyst, recently shared a bold XRP price prediction, presenting the possibility of a 385,464% surge to an ambitious $2,500 price. The analyst said he received this revelation from a well-connected banker with ties to major and regional banks, as well as central banks. According to him, the story unfolded during everyday discussions related to work where the banker, unknowingly following Egrag's crypto insights, recommended the X account to the analyst. Intrigued by the banker's recommendation, Egrag soon discovered that this well-versed financier was unaware of his true identity despite following the account. How does 40K XRP make 100 million? The sequence of events included an agreement that would expose his identity in return for addressing analytical uncertainties. As the analyst disclosed his authentic identity, the financier presented a perplexing question. How could 40,000 XRP translate into 100 million? In response, Egrag presented a chart and a prediction spanning nearly a decade, forecasting from 2017 to 2027. The banker, acknowledging the alignment with financial trends, highlighted an extended cycle reminiscent of the period from 2013 to 2017, but stretched out over twice the duration. The banker showed that holding on to XRP for a decade could result in significant profits. The banker mentioned that David Schwartz had discussed how owning 40,000 ETH could have led to a value of 100 million. This was attributed to the changing banking trends, Basel III regulations, and global politics. The banker believed that this market cycle would be similar to the one between 2013 and 2017, but would last twice as long. Notably, for a 40,000 XRP to hit 100 million, one XRP needs to appreciate to 2,500. A call to action. The primary message from the analyst urged followers to take action and amass XRP. The forecast indicates that XRP might be crucial in tackling liquidity challenges during economic slowdowns. As the pace of money circulation diminishes and governments explore avenues to boost economic activity, the potential rise of XRP could be transformative. The banker recommended that individuals acquire XRP as it could potentially serve as a solution for liquidity during sluggish economic times. Money circulation is on the decline, and authorities must take measures to boost it. This move has the potential to alter the situation significantly. Egrag emphasized the uniqueness of this narrative, sharing it solely to disseminate the story without any additional motives. The analyst expressed a commitment to accumulating XRP until his family requires it, a statement underscored by a hopeful outlook for the future. It certainly sounds very bold and self-assured. To be honest, I don't really believe in such predictions because there are too many limiting factors. I think you realize that. The idea that XRP can grow to $5, $6, even $10 may be considered as a probability. The rest sounds like science fiction to me, at least right now. Of course, it's up to you to decide what you believe and what you don't. By tradition, let's move on to the market review. This is Bitcoin 4-hour time frame. It's more or less stable so far. It's sideways, now trading inside imbalance again. Since December 23rd, it has had 6 attempts to break the 43,860 level, which is key resistance. But so far it has failed, and it's building up strength. The more interesting point that I don't quite understand is the dominance. More specifically, why with Bitcoin dominance at 51% and consolidation, most altcoins are falling. I think it's most likely a correction and accumulation before the big flight. Because under these conditions, they should all be rising like crazy. However, I still think now is a good time to buy, at least until January 10th. After that, it will be seen whether ETFs will be approved or not, I don't know. Maybe we will have to close all long positions and go short, but if everything goes well, we will fly to the moon. Now a few words about XRP. Also 4-hour time frame. Here we had a good growth of 10%, but there was no closing above 0.6513, after which the correction as well as in all else. We consolidated below 0.6336 and continue moving down. I can't say what's next, we need to wait a bit. Domination is low, but where it has gone I have not realized yet. I will give an update tomorrow. Don't jump in on the highs and only then will everything work out perfectly. See you in the next videos.